Hello, good morning, good afternoon, and good evening from wherever you're watching this video from, and welcome back on my channel where I discuss about finance and economic investments. So today I've just prepared a lesson on the investing in stocks for beginners. What do beginners need to know about before you invest in stocks? So there are things that you need to make sure that you have considered first before you make any move that you want to invest in stocks. So let's just dive in directly. So most people think like you need a suit, a finance degree, or even 100,000 Kenya shillings for you to be able to start investing in stock market. But the truth is, you can start it today actually with just the price of that particular cup of coffee. By the end of this video, you will know exactly how to buy your first stock, how to avoid the mistakes that lose people money, and the exact strategy used by the world's wealthiest investors. And let's dive in. So I usually make my presentations on the board. I'll be able to write things on this board. You can be able to read through it. You can also be able to interact by saying what I'm writing here and explaining further in terms of what you need to know, and also to prepare my notes so that I just make sure that you understand exactly what I'm talking about. So what's a stock actually? What is a stock? What is a stock? If I talk a stock, imagine if buying like a piece of a company or a piece of a business. That's basically how I'm talking about buying a stock. It is like you own a portion of that particular company. When the company makes profits, that's you also make profit as part of that particular company. That's basically what a stock is. So think of a small piece of a business. If you buy a share of, like, let's say KPLC or Safaricom, you literally own a tiny slice of that particular company. So when the company makes money or grows more valuable, the slice becomes worth more. There are two ways to make money in stock. For beginners, you also need to know that there are two ways to make money in stock. There are two ways to make money. There are two ways to make money in stock. Number one is usually what we usually the capital gain, what we usually call the capital gains, and number two is what we usually call the dividends. So about capital gains is whereby you buy stocks low. I usually mean here you buy low and sell high. You buy low and sell high, basically that way. You buy stocks in this company, you buy them at a low price, and then intend to sell high at a different date. And for dividends, now this is whereby you buy stocks in the company, then the company makes profits and you are given something at the end of it. Like the company pays you cash just for holding their particular stock. So this is some of the ways you use to make money in stocks. So someone can ask, and how will I be able to make money when I invest in stocks? This is how you do it. You can buy them low and sell high, or you can be paid cash by the company through what we should call the dividends. So let's move on. Before you do anything in the stock market, before you decide investing in stock market, there are things to consider. There are things to consider before investing in stock market. And one of the them is you need to have an emergency fund somewhere first. An emergency fund. You need to have an emergency fund somewhere which helps you to be able to maneuver any other things that will happen in between. Buying stocks, when it depends, like when the stocks are when you buy a stock, you'll have to wait until the right time for you to be able to sell that particular stock. And if you didn't have any emergency fund, let's say for instance maybe you lose your job at any particular point, you'll find that there's no way you can turn there's no way you can get your money back from stock to be able to sort your issues, because maybe you lost your job or you want maybe an emergency fund maybe for medications, and it becomes difficult. And as I always say, if you want to have the best emergency fund, you can have what you call the MMF. MMF is usually one of the best emergency funds you can be able to use, the money market fund, because the small amount it has a very low entry and it has a high liquidity. It has liquidity part of it, and it's also a very stable way of saving your money. So through the MMF, whereby you can be able to get your money back anytime you want. At the same time, your money is also getting some profit, so it's making some more cash when it's still in MMF. Number two, you also need to have what we shall call the biggest problem, which is high interest debts. High interest debt, a high interest debt. If you have any high interest debt, please make sure that you clear it first before investing in stock markets. Why? Because it is difficult for you to be able to handle stock markets and be able to monitor what is happening, and at the same time there's a debt like for Mshwari or Fuliza, which takes like 5 to 10% of whatever amount you are having each month, or even a bank account, or even you have just maybe from the Shylocks, like such things. You need to have your mind settled in terms of you want to invest in stocks. So any high interest debt, make sure that you clear it first out, so that you are able now to be able to invest in a stock market in a easier way. So after you have done all that, what do you need to do? You now need to choose your broker. And who is your broker? Now this is the person, or this is the company which you will use to be able now to buy stocks which are being sold at Nairobi Securities Exchange. So you now need to choose a brokerage company. Choose a brokerage company. And what do I mean by brokerage company? I've just said it's a company which will help you to be able to now to get the stocks from the Nairobi Securities Exchange. Who is your broker? And your broker can be either, you have so many, but there's like Britam. You can have Britam as one of your brokers. You have ICA Lion. You have ICA Lion as one of the other brokers that can maybe help you maybe get access to the Nairobi Securities Exchange to be able to buy your money there. And also at the same point, for beginners, you can also look for apps which are giving you 0% commission, which have 0% commission, or they have you are getting a fractional share when you're buying a stock. Because of what? Having a fractional share is better, because it has a very low entry. You can even start with the 500 Kenya shillings. If the share itself is even at 50,000 or 100,000 Kenya shillings, and just very low. So make sure that you are looking for such things. So from the brokers, also make sure that you have considered that particular thing. Then after that, now what do you need to do? Now after that, now need to invest now in the stocks itself. Now these ones who have made sure that you have all that is required. Now you need now to invest in stock. Invest in stock. And how do you invest in the stock? There are two ways. There are two ways to invest in stock. Number one, you have what you should call the individual. You can buy the individual stock. You can buy individual stock. You can say to buy individual stock. Or number two, you can go for what I usually call the index fund. The index fund. So individual stock is basically at the Nairobi Securities Exchange. There's usually two types of how you can be able to get stocks there. And when I talk about individual stock, I mean you can decide to buy stocks from one particular company. Let's say you have decided to buy Safaricom. It's specifically Safaricom. You find that the problem with that, buying an individual stock, is if the company doesn't make good profits, or if the company makes losses, you have nowhere to run to. But for the index fund, this is whereby so many companies have been pulled together, like let's say 500 companies, and you just buy a fraction of that. So even if one company out of the 500 doesn't work, or it fails, you have other 499 companies which are doing which are performing. So basically that one becomes the best way. And to do that, examples of such companies that offer the index fund, you have the ETF, we should call the ETF, the exchange traded funds, on the NSE, on the Nairobi Securities Exchange, can be able to help you do that, to get the index fund. So index fund, I mean that you have like KPLC, Safaricom, let's say another company, which one you know about, all those companies that have been brought together and they are now selling stocks, so you can be able to buy the index one. And that one is the best one actually for someone who is a beginner, because the risk of loss is very low, because there are so many. Even if one company fails, you can be able to get from other more companies. But for this, the individual stock is a bit tricky, because if that company, you need to have done your good research to know exactly how the company performs, how it makes profits, what is its asset, what are its future plans for expansion, blah blah blah, all that. So it becomes also tricky for you to do basically in that. So basically that's what you need to do to ensure that everything is done in a proper way. And there's also a way how to do it. Now that you have now decided that which one are you going for, either you're going for individual stock or you're going for index fund, there's now what we usually now say now buying the stock. And buying the stock, there's usually two ways two ways of buying stock. 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 Number one, they have the market. They have what we call the market order. What we shall call the market order. And number two is the limit. The limit order. The limit order. Hope it's visible. The market order and the limit order. When I talk about the market order, this is whereby stocks, you buy stocks immediately at the current price. Like the market order, you just go to the stock Nairobi Securities Exchange and decide that I want to buy this stock. They leave your stock and this is the current price that's being sold. You buy it and that is it. But for the limit order, this is whereby you set the maximum amount you are willing to pay as the price for that particular stock. Then you place your stock and you go. Yeah, so basically that's the basic way to be able to do that. So you set a maximum price you are willing to pay. Once you hit the confirm, that one is confirmed and you just go. But for the market order, this is whereby you go there, you get this Safaricom selling its stocks at blah blah with this particular price, you buy them and that is it, and that's the set price and that is it. But for the limit, you give you a limit that this is the maximum I'm willing and able to pay. Then you place that order and you wait for everything to happen. Now, so basically that's all about stocks for the beginners. So that's what you need to know. And make sure you invest. Make sure you invest in stocks, because it's a good thing. Actually, you can get some more cash from there. You can be able to get some more money, and you can also be able to improve your future life. And remember, the biggest secret to wealth isn't picking the perfect stock. It's all about time. Because of what? It's because of the power of compounding. So that the more you give it time, the more your money compounds, gets more interest, and the interest also earns some more money. The money you earn also still earns some more money. That's how you make more money. So the earlier you start, the more your money compounds. So very, very important to be able to check on that. If this video helped you to feel more confident, hit that like button and subscribe for more money made simple tips, and comment also below in the comment section so that I can be able to read through your comments, and also tell me about what else do you want me to discuss about, and what else do you want me to teach you people. Others, thank you so much for watching this video to this particular end, and subscribe for more financial tips and for more Kenyan insights in terms of how to invest. Enjoy your time and bye bye.